G'day everyone, welcome back to Pete's Investing. Today is May the 9th, 2023. This is the US dollar DXY update. Our weekly and daily, the weekly showing a bearish momentum and a daily is neutral, so let's explain what that means. On the weekly first, we've got the triple moving average, which is the 3, 5 and 60. They're all in a bearish momentum, and that aligns with our CSI 150 moving averages 5 and 50, also in a bearish momentum. So when they're aligned, this indicator shows a bearish signal. Where it shows a positive is where they're both going in an upward direction. That's a bullish, and where it's one of them is conflicting with the other, that shows a negative, or I should say a neutral position. So at the moment, the weekly chart is showing a bearish signal, so only short trades primarily. On the daily, that's turned into a neutral position, so avoid going long or short, and that's because of this price has been consolidating along this key support area at 10,050, and also below this descending trend line, which has been sitting there for a while. Now you'll notice it's been bouncing off this support area for a number of, or some time now, since February. It touched it the first time, and we need to see it break more significantly to the downside to continue bearish outlook, or break above this diagonal descending line to be more bullish. But again, let's wait for this for the moving averages of the both price chart and the CCI to align before taking any trades on the lower time frames. And on the hourly, again, we don't take trades, but this is just trading. This is how you would trade the based on the weekly and daily if they align. Let's assuming they were going short, you would take a short entry when the candle breaks below the fractal, like it did there. There's another entry made there, and so on. Another entry there. Now I'll zoom out on this one, because this is showing the profitability chart, and you'll notice all these have been single entry trades, except for this point back here until September 22, when you entered the first contract, second and third contract to average down. But notice the impact of the profitability as a drawdown on your profitability. So to avoid that effect, again, you need to follow the weekly and daily signals. So again, this is a bullish or a long positioning only back test as an example. So if you look at the so that was the last area you would have entered a long position, and that aligns with this area here. So that would have been around the area you would have entered the last long position. So you would have entered one contract, you would have been one contract only, not three in a downswing against you. Until we get a bullish view in the coming weeks or months, you want to hold that there and then wait for that reversal. So at the moment, of course, that's a bullish long positioning only. The same applies for if you're going bearish. You could have entered only bearish signals when this period was showing a bearish signal back here in alignment with the daily as well. So to understand how to trade this and other trading strategies, reference the Patreon page for exclusive access to weekly stock scans. We look at the average down strategies. We scan for stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.